Welcome to Week 6, Advanced AI Research. Up until now, you've learned the fundamentals of reading markets, understanding price, patterns, and sentiment. But this is where your thinking evolves, moving past simple signal detection to decision-making under uncertainty. Welcome to Week 6 of Advanced AI Research, where we shift the focus from finding signals to mastering decision-making. Trading is fundamentally not about finding signals, but about making sound decisions when the outcomes are uncertain. Every trade you consider has two sides, a reason it could work and a reason it could fail. Most traders make the critical mistake of only looking for confirmation of what they already believe, committing based on a single piece of information. However, markets don't reward certainty. Instead, markets reward balanced thinking and the ability to objectively evaluate both the bullish and bearish sides of a trade. To achieve this, always ask yourself, what supports this trade? What contradicts it? And critically, what might I be missing? This structured evaluation separates reactive traders from structured decision makers, but doing this manually every time is difficult. You are required to process and weigh multiple variables simultaneously: price structure, trend alignment, indicator signals, market sentiment, and risk to reward. Without a consistent framework, decision-making becomes inconsistent, sometimes fast, sometimes delayed, and often emotional. Traders slow down here, not due to lack of knowledge, but lack of structure. This is where tradegpt.guru changes your process. Instead of forcing you to manually evaluate every factor, it structures the analysis. The platform organizes the elements you've been learning into a clear reasoning flow, identifying what supports the trade, what weakens it, and the likely scenarios. This structured perspective allows you to think clearly without starting from scratch every time. The goal is to enhance your judgment, reducing the time spent organizing information so you can maximize time evaluating it. Now let's talk about risk and reward, because a good trade is not always a smart trade. If the potential upside is small and the downside is large, even a high probability setup can lead to poor outcomes over time. Structure is key to consistency. Professionals think in terms of balance, consistently asking, is this worth taking? Answering this consistently requires structure. As you go through this week, focus on how decisions are made, not just what decisions are made. Observe how different factors interact, how probabilities shift, and most importantly, how uncertainty is managed through structure. Once you develop this way of thinking, you stop chasing trades and start selecting them. And that shift is what builds true consistency. This course is proudly sponsored by tradegpt.guru. Visit tradegpt.guru to learn more and enhance your trading framework.